Answering the question of what type of stocks not to buy is a complex question, but there are some very basic rules that you can follow to weed out a lot of different stocks. There's a concept of beating the market. So the S&P 500 is often said to be the market in the sense that it's an average of the top biggest caps companies. So if a stock is beating the S&P 500 or the SPY, which is an ETF index fund that tracks the S&P 500, then it's said to be beating the market. So if you're looking at different stocks to potentially buy, then you want to use a comparison tool. Like on this chart here, it shows Apple, Facebook, and Santa, which is a more obscure company, I think, but I had to find one that was underperforming the market. So um, the main thing you have to figure out is the time period that you're looking at. So in this case, it's a 1 hour chart, so it's not an extremely long time period, but it goes back at least a half a month or a month or so. I'm not sure exactly how far, but so you can see that the Santa stock is definitely underperforming um, the S&P 500 as well as the other two stocks. When using a tool like this where you can compare different stocks, you can zoom in and out. So you can see over the longer period, it's still underperforming. However, it is very volatile, so at certain times it is going to outperform. So if you look from this period here, you would see that. So as far as the question of which stocks not to buy, it's really simple. You shouldn't buy stocks that are underperforming the S&P 500 over the time period that you're interested in. So if you have a really long time frame, it's possible that a stock like this could outperform it, um, but you wouldn't be able to make that determination based on technical indicators because clearly the trend for this stock is that it is underperforming the market even over a long term. So it's obviously still a very complex question, but the simplest way to think of it is that you shouldn't invest in a stock that doesn't seem to have potential to beat the market based on what you can see at the current time and on what your goals are for the future. So if you're day trading, you only really care about that day. So this may be a good stock to trade on certain days because certain days it will definitely beat the market. But as you go out further to a further out time frame, you need to look at other things. So a stock like Apple or Facebook is going to probably beat the market over the long term, or at least it has for long periods of time. We can try a day chart and look. So you can see over a fairly long period of time, these stocks have beaten the market.